All right, traders, before we jump into the analysis, let me make something clear real quick. I'm no longer available on Telegram. I've moved everything over to WhatsApp. So if you ever get messages from anyone claiming to be me on Telegram or anywhere else, just know, it's a scam. Be sharp, be aware. There are way too many fake accounts out here trying to take advantage of people using my name and my work. If it's not through my official WhatsApp, it's not me. Simple as that. Now with that out the way, let's get into the chart. Alright, so here we are, looking at Euro to US dollar on the weekly chart. Now let's take it from the bottom. As you can clearly see, we've got our classic structure forming, 3 solid touches at the bottom of this trend line. For those who've been studying price action, you already know this is a textbook sign of potential bullish movement. It's one of those simple yet powerful clues that the market might be setting up for a reversal or at least a continuation to the upside. And just like we anticipated, price began to push up, clean, impulsive movement. Everything looked solid. But then, things started getting interesting. Now here's where most traders get caught. And honestly, even I got a little too comfortable. Right around this zone here. It's not our main swing high, not the ultimate target, but it's definitely what I like to call an area of value. Let me break that down. See, this area might not be significant from a structural point of view, but it's still important. Why? Because price reacts here. It stalls. It breathes. So let's zoom out for a second. When we take a step back and look at the broader market structure, you can clearly see the real swing high sitting up here. That's the zone that truly matters. That's where the bigger liquidity lies. And if you've studied liquidity traps and how institutions play the market, you know exactly what that means. Price is naturally drawn to those areas, not just because it wants to fill gaps or complete structure, but because liquidity rests above swing highs and swing lows. That's where the orders are. That's where stop losses are clustered. And big players love to grab those before making the real move. So what does that tell us? It tells us that everything between the third touch and that top swing high is just noise, a journey. This little area I was looking at, it's perfect for scalping to the downside, short, quick trades in and out. Nothing long-term, nothing heavy. And for a moment, I was cruising, floating profits, textbook entries, all smooth. Those of you who were on my live session that day, you know what I'm talking about. You saw it unfold live, real-time analysis, real-time profits. I had multiple trades open, but I only closed one, thinking I'd ride the rest a bit lower. But then price just kept pushing up, like it had a mind of its own, breaking through the area, ignoring my setup completely. So what happened? What did I miss? Where was the disconnect? That's where we need to do what all great traders do, review. So let's dive into the lower time frames and break this down step by step. Because the answer is always there. You just have to look in the right place. All right, so now let's look at this part of the chart in more detail. Right after this break, this is exactly where I first entered my sells. Everything looked clean. We had a nice push down, price came back in the form of a correction, and then dropped again. I mean, in my books, that's a solid structure. Classic impulse followed by correction, and then continuation. It's the kind of sequence we look for all the time. Impulse, correction, impulse. That's where the high probability trades usually sit. But here's where I messed up. There was something else on the chart. Something important. Something I completely ignored. If we look a little closer down here, what do you see? We've got a double bottom forming. And not just any random one, a clean textbook double bottom structure. That's a clear reversal signal. It's practically the market yelling, hey, something's about to change. But I didn't listen. You know why? Greed. Greed took over. I saw the earlier profits, I felt that momentum, and I told myself, just one more push down, just a little more. I wasn't trading the chart anymore. I was trading my emotions. And that's the part one want all beginners, actually all traders, to understand. You've got to trust your analysis. Not your feelings, not your hopes, your analysis. Look, I always say this, there are good losses and bad losses. A good loss? That's when your setup makes sense. Your structure is solid, your entry is clean, you followed your plan, but the market still goes against you. That's okay. That's trading. That's part of the game. Be proud of that loss, because it means you're doing things right. But a bad loss? That's when you ignore the obvious. That's when the market shows you red flags, like this double bottom, and you choose to overlook them. That's when you let emotions, like greed or fear, take control. And that's exactly what I did here. So if you take anything from this lesson, let it be this. A good loss teaches you. A bad loss exposes you. The sooner you can tell the difference between the two, the faster you'll grow as a trader. All right, let's keep going, because the lower time frame still had a lot to reveal. Let me show you exactly how this all unfolded. So let's do this. Right now, price is still looking like it might drop. The momentum is there, the pressure is there. But remember what we always say. Structure first, and then the rest can follow. It's tempting to jump in based on what looks like a setup, but trading isn't about guessing. It's about reacting to what the market is actually telling you. So if price continues to drop the way it's been moving, there might be an opportunity to scalp somewhere around this zone right here. It's not a full swing setup, more of a quick in and out move. And if the setup aligns, our short-term target could easily be this level down here. But again, let me repeat this. Structure first. Everything else, momentum, entries, confirmations, they all come after the structure is in place. If you just chase price based on what you think is going to happen, you're gambling. But if you wait for structure to tell the story, you're trading with precision. So now it's a waiting game. Let's stay patient. Let's wait for price to show its hand. And when the structure is clear, then we strike. All right, traders, that's it for this breakdown. I hope you picked up some gems. And remember, trading isn't just about winning trades, it's about growing through every lesson, win or lose. And once again, I'm only active on WhatsApp now. If you see my name on Telegram or anywhere else, that's not me. Don't fall for it. Stay sharp, stay safe. If you found value in this, don't forget to like, share it with your trading circle, and drop your thoughts or questions in the comments. I'm always here to help guide where I can. Until next time, trade smart, stay disciplined, and respect the process.